Welcome to EduTap and welcome to today's Finance 360-degree session. So today we are going to discuss the payment aggregator master direction. First of all, do tell me if I'm clearly audible and visible and everything is fine. So give me a thumbs up if everything is good, if everything is fine. And good morning to all of you. Good morning Aniket, good morning Utkarsh, good morning Nitin. So welcome to this session. So today we are going to discuss the RBI's payment aggregator directions. So the Reserve Bank of India has released a very lengthy master direction for the payment aggregators. Okay, and let me tell you that this is very important from the examination point of view, from the phase 1 as well as from the phase 2 point of view of the RBI grade B 2025 examination. As it was mentioned, this master direction for the payment aggregator, this is not only mentioned in RBI notification, but it is also in the RBI press release, okay, as well as this is quite in news recently. So RBI's payment aggregator directions, what is going to be changed, what is this changes that has been brought for the payment aggregator, online, offline, cross-border, what is the difference between the payment aggregators and payment gateways. So all of this we are going to discuss in today's session so that you have the clear idea about the payment aggregator, payment gateways and the directions that the RBI has released for the payment aggregators. Okay, so this is what we are going to discuss, the important data points I will mention for you. Okay, so let's get started without any delay. But there is a big announcement that we have brought for you, the Shubh Navratri offers, where we are providing flat 75% off if you use the code Festival 75 for all the regulatory body courses for the RBI grade B, IRDI grade A, NABARD grade A, IFSC grade A, SEBI grade A. For all these courses we have brought for you flat 75% off. For the combo courses also we have brought for you flat 75% off. Okay, and this is only valid till 30th September 2025. So if you want to avail the offer, you can avail the offer by tomorrow. And here you are getting flat 75% off if you want to have the crash course. Okay, for RBI grade B examination, if you want to have the test series, if you want to have the gold course, silver course, all the courses have the flat 75% off currently. This is a good opportunity. If you have not bought the course till now and you want test series or you want the crash course, you can avail the offer. So this is the idea, and remember that it is till 30th September 2025 and the code is Festival 75. So now starting with the master action on regulation of payment aggregator. So we will discuss that what is payment aggregator, what is payment gateway, what is the difference between the payment aggregator and payment gateway. So the definitions have been provided by the RBI in the master action. But first let's understand that why this new direction have been released. So master action on regulation of payment aggregator. So RBI had issued the guidelines on regulation of payment aggregators and payment gateways in 2020 and 2021 also there were regulations that were released, okay, for payment aggregation. Now later on in 2023 there were directions that were released for the payment aggregator cross-border. So for the cross-border transactions, for the cross-border transactions also there can be payment aggregation or payment aggregator that can work. Okay, so for the cross-border transactions also there can be payment aggregation that can happen, and the payment aggregator cross-border directions were released in 2023. Now subsequently on April 2024 the RBI placed on its website for public comments the draft directions on regulation of the payment aggregator. RBI said that we want to further clarify and we want to provide the clarity for the payment aggregator regulations, and we want to streamline the payment aggregator regulations. Okay, and that's why the RBI released a draft direction in 2024 for the public comments and on a review of the inputs that have been received in line with the RBI's endeavor to further rationalize, clarify and streamline the regulations. So RBI received the inputs from the public comments were received by the RBI, and now after catering to the public comments, after reviewing the inputs received and in line with the RBI's endeavor to make the payment aggregator regulations more clear and streamlined, so RBI has released the comprehensive master direction for the regulation of payment aggregators, and this is really a very comprehensive direction that the RBI has released for the payment aggregators. Okay, so we will discuss this directions from the phase 1 perspective, phase 2 perspective. The data points, the facts will be directly important from the phase 1 and the other points will be important from the phase 1 as well as phase 2. Okay, so we will have the clarity about the master action today. So RBI in 2025 now has released the detailed comprehensive master direction for the payment aggregators, and this is released with the power that the RBI has under the Payment and Settlement System Act 2007 and Foreign Exchange Management Act 1999. Okay, so this is the idea. So RBI had previously released guidelines for the regulation of payment aggregators in 2020, 2021 and 2023. Also payment aggregator cross-border directions were released, but now in 2024 RBI released a draft direction, and in 2025 the RBI has released the final master direction on the payment aggregators. So these directions shall be called Reserve Bank of India Regulation of Payment Aggregators Directions 2025. And these directions shall be effective immediately unless indicated otherwise, unless provided for otherwise. Okay, applicability. So these directions shall apply to all the banks and non-bank entities that are undertaking the payment aggregator function. Okay, these directions shall also apply to all the authorized dealer banks and the scheduled commercial banks. So authorized dealer banks, these are those banks that are authorized to undertake transaction in foreign currency or provide for the transactions in foreign currency. So authorized dealer banks are those banks that are authorized by the RBI to undertake the foreign currency transactions or to allow for the foreign, like to help in the foreign currency transactions. Okay, so these directions shall also apply to all the authorized dealer banks as well as scheduled commercial banks which engage with entities undertaking the payment aggregator business. Okay, so this is the idea. So these directions are going to apply to all the banks and non-bank entities that are undertaking the business of payment aggregation, as well as these directions will apply to the authorized dealer banks and scheduled commercial banks that are related to the payment aggregators or payment aggregator entities. This is the idea. Any confusion till now? Any confusion till now? So now we are coming to the definitions. Now cash on delivery transaction, we all know what is cash on delivery transaction. I have got this product, let's say I am giving the cash. Okay, so if you are ordering something from Amazon, if you are ordering something from Meesho, Flipkart, even Zomato, even Blinkit, so what do? You can do cash on delivery transaction. Okay, where when you get the product, then at the same time you are giving the cash or you are paying to the person who is delivering the product to you. So that is cash on delivery transaction. Okay, so a merchant transaction wherein banknotes or currency notes being legal tender in India is offered for and at the time of delivery of goods or services. So when you are getting the goods or you are getting the service, then you are paying. So this is cash on delivery transaction. Contact point verification, this is the physical verification of the address or place of the business of the merchant. Okay, so this is contact point verification. So when the physical verification is happening of the address or place of a business of the merchant, let's say there is some food outlet, okay, that is present on Zomato. So when the physical verification of that food outlet is happening, that actually the food outlet is present at the place mentioned, so that is the contact point verification, physical verification of the address or place of business of the merchant. E-commerce, we all know e-commerce when through the electronic means the buying and selling of the goods and services are happening. Okay, so buying and selling of the goods and services including digital products conducted over digital or electronic networks. So when you are buying or selling, when the buying and selling of the goods and services is happening over the digital and electronic network. Okay, inward transaction now means the transaction inflow, transaction involving the inflow of foreign exchange. So let's say there is Fab India website. Okay, now there is a foreign person. Okay, there is a US citizen or there is a German citizen that wants to buy the kurta from the Fab India website, from the original website of Fab India. Okay, so the German citizen is placing the order on the Fab India website. So here you can understand that Fab India website is like the transfer will happen of the product from India to Germany. Okay, so here and the German citizen will be paying in the Fab India website or will be paying. Okay, so this is inward transaction when the foreign exchange is inflowing. Okay, so transaction involving the inflow of foreign exchange. So German citizen will get the product and the German citizen will have to pay to this to the Fab India. Okay, so this is the idea. Inward transaction involving the inflow of foreign exchange. Marketplace, now marketplace, the e-commerce entity like the Amazon, Meesho, Flipkart, Snapdeal, they are the e-commerce entity which provides an information technology platform on a digital or electronic network to facilitate the transactions between the buyers and the sellers. So the buyers and sellers, multiple buyers and sellers are being brought together through the marketplace, that is the e-commerce entity, that is through Amazon, Flipkart, multiple buyers and sellers are coming together. Okay, so this is known as marketplace. Marketplace is nothing else, it is an e-commerce entity which provides for the buyers and sellers to come together through the electronic, through the digital means. Now merchant is the entity or a marketplace that sells goods, provides services or offers investment products, and includes exporters and overseas sellers also. Okay, so the exporters from our country that are exporting, or the overseas sellers. So all of this comes under the merchant. Outward transaction, now let's say there is Alibaba website or AliExpress, or let's say there is some Temu website and such. These are the websites of the other countries. Okay, let's say Alibaba is of China, AliExpress is also of some other country. So let's say from this website directly we are purchasing something from this website directly. Okay, so this is a foreign website or international online website this is. So we are purchasing something from here and we have to pay to this Alibaba website. So this is outward transaction involving the outflow of foreign exchange. When the Indian citizen is buying something from the international website, from a foreign website, okay, we have to pay. So transaction involving the outflow of foreign exchange. For the import that we are doing, from the purchase that we are doing from the international website, we have to pay. So that is outward transaction. Now payment channel, the method or manner through which payment happens. So payment could happen through the card channel, UPI channel, internet banking channel, POS, point of sale channel. So the method or manner through which the payment happens, so that is payment channel. Now coming to payment aggregator and payment gateway. So payment aggregator is of three types: payment aggregator physical, payment aggregator cross-border, payment aggregator online. So all of these we have to understand now. Give me a thumbs up if everything is clear till now. So now payment aggregator, an entity that facilitates the aggregation of payments. Okay, so payment aggregator is what? Payment aggregator, it is the intermediary, it is the connection point between the customer and the merchant. Okay, so let's say through the Amazon, the customer want to buy something. Okay, the customer wants to buy something from the Amazon. Now the customer has to pay to the merchant, and there are hundreds of customers that have to pay to the merchant, let's say. Okay, so the payment aggregator, they are the intermediary that provide the interface for the customer to pay to the merchant. And the payment aggregators, they are not only providing the interface, but they are also catering to the transfer of funds, and they are also facilitating the transfer of funds. Okay, so an entity that facilitates the aggregation of payments, the collection of payments made by customers. So from the customers, the payment aggregator collects the payments so that it can be transferred to the merchants. Got it? So payment aggregator, they have a very crucial role, they have a very important role from taking the money from the customers and paying the merchants. So an entity, the payment aggregator, is the intermediary that facilitates aggregation of payment made by customers to the merchants through one or more payment channels. Now customer could be paying through the UPI or through the wallet or through the card. So the customer might be paying through various channels or through different channels. So payment aggregator facilitates the aggregation of payment from the customers and pays further to the merchants through one or more. Now the payment can be done by the customer through one or more payment channel through the merchant's interface. Okay, so through the merchant interface, physical or virtual. So this is the basic ideas, and the payment aggregator subsequently settles the collected funds to such merchants. So let's say there is Amazon, it provides the interface, and the payment aggregator is providing for the customer to pay through different payment channels, through UPI, through wallet, through card. Okay, so the customer is provided with the different payment channels under the payment aggregator, and the customer pays. Okay, and the payment aggregator collects the funds to further transfer the funds to the merchants. So payment aggregator facilitates the transaction of the funds, or payment aggregator facilitates the aggregation of payments and further payment for the transfer of funds to the merchant. So this is the idea. Now payment aggregator physical. Have you have you ever gone to a mall or you have gone to a store and you have seen that okay, there is the QR code on which the Razorpay is written, there is a POS machine on which Razorpay is written, or there are different devices through which you can you are able to pay through the QR code through the POS machine, and on the instruments there is Razorpay that is written. So payment aggregator, Razorpay is a payment aggregator that facilitates the aggregation of payments from the customers and transfer these payments to the merchants. So payment aggregate facilitates the transaction between the customer and merchant, and payment aggregator is not only present in the online platforms but also in the physical manner. So payment aggregator physical basically facilitates the transactions where both the acceptance device like the QR code and the POS machines and the payment instrument are physically present in close proximity. Let's say you are going to Kalsang to eat the food, or you are going to a store or a mart, let's say D-Mart, to buy something. Okay, now there you can see the QR code of Razorpay or PayU and such, or you can see the POS machines of Pine Labs, Razorpay or PayU and such. So you are paying through that QR code, or you are paying through that POS machine by swiping your card or by scanning the QR code. So the merchant and the customer, they are present in the same location. The acceptance device, that is the QR code, POS machine and the payment instrument, mobile or card, is present in the same location. They are physically present in close proximity. So this is the payment aggregation in the physical manner. Okay, and the payment aggregators, they provide for the aggregation of payments in the physical manner also. Any confusion in this? Is this clear? So this is the idea. This is the payment aggregator physical. Now payment aggregator cross-border. So payment aggregator cross-border, it facilitates the aggregation of cross-border payments. So between the merchant, like I have told you that in India there is Fab India website. Okay, there is Tata Motors website, let's say, and XYZ. There are various websites of the Indian firms. Now foreign entities, foreign individuals, they want to buy something from the Indian website, from the Indian company. Okay, they can just order it on the website and they can get the product and they will pay for the product, okay, through the website itself. So payment aggregator, so there are various payment that happen through the website directly. So payment aggregator cross-border. Now on the website, in the Indian website, let's say there is payment aggregation mechanism that is provided, so that through the Indian website itself the payment can be taken and the product could be through the Indian website the product is being selected and the product is being ordered, and through the Indian website that is connected with the payment aggregator, the payment is also being taken, okay, through the payment aggregator. So payment aggregator, it facilitates the payment aggregator cross-border. It facilitates the collection of the cross-border payments for current account transactions, for the trade in goods, for the trade in services and such. So for the current account transactions, that is for the trade in goods or trade in services. Let's say from the Indian website there is some consultancy services are taken, and in the Indian website itself the payment is happening through the payment aggregator process. Okay, so payment aggregator, it facilitates the collection, the aggregation of cross-border payments for the trade in goods and trade in services that are not prohibited under the Foreign Exchange Management Act. So this is the idea. Payment aggregator cross-border facilitating inward transaction. So basically the German citizen or the American citizen or the Italian citizen, if they are buying something from the Indian website, if they are buying the goods or services from the Indian website and they want to pay, so they can pay through the payment aggregator cross-border that is connected with this Indian website. So inward transaction can happen. The foreign entities, the foreign individuals, they can send the money to India through the payment aggregator cross-border that is connected with the Indian website. Now let's say you want to buy something from Alibaba website or AliExpress, or you want to buy something from Apple Store Global, or you want to buy something from Walmart Global or different booking platforms. Okay, so they are the foreign websites. They are the foreign websites. They are the international websites through which you are in the Indian citizen. They are trying to buy something. So let's say you are buying some face mask, electronic face mask or something that is from Alibaba website or from AliExpress and such, or from Walmart you are buying something, and when you are buying something the Indian citizen will have to pay. Now this happens through the payment aggregator cross-border. Outward, this is the outward transaction. So payment aggregator cross-border, they also facilitate the outward transaction. Okay, so this is the idea. So a non-bank entity authorized as authorized dealer category 2. So there are such non-bank entities that are not the banks. They are also authorized as authorized dealer category 2. They are also allowed to undertake or to to help in the foreign exchange transaction. Okay, so they shall not fall under the purview of the payment aggregator cross-border business, and they are facilitating the current account transaction not prohibited under FEMA, so they shall not fall under the within the purview of payment aggregator cross-border business. So basically payment aggregator cross-border, that is the payment aggregation can happen at the cross-border level, at the inward transactions are happening, outward transactions are happening when the international websites and such are connected. So payment aggregator that facilitates aggregation of cross-border payments for the trade in goods, trade in services through e-commerce mode, okay. So in this case, the inward transaction, the outward transaction that is happening for the e-commerce products and such, so this can be undertaken by the payment aggregator cross-border. Okay, so this is the basic idea. Any confusion here? These terms are important. If you understand the terms, the other things will be very easy. So payment aggregator cross-border, it basically facilitates the aggregation of cross-border payments for the trade in goods, trade in services for its onboarded merchants through e-commerce mode. So websites like Amazon, Flipkart, Myntra use domestic payment aggregators because Amazon India, Flipkart India, so they have established themselves in India. They have the warehouses in India. So Amazon India, Flipkart India, Myntra India, they use the domestic payment aggregators. But the websites like AliExpress, Apple Store, Alibaba, Walmart, if they allow for the Indian citizens to buy from them, then there is the payment aggregator cross-border that will be allowed. That will facilitate the inward transaction or outward transaction. That will facilitate the inward transaction or outward transaction. Let's say the Fab India e-commerce website. There is the Fab India website that is under the e-commerce that allows the electronic commerce. So the Fab India website will have to connect with the payment aggregator cross-border if there is the international transactions that are happening. If the foreign citizens, if the foreign entities, they are buying from Fab India, so they will have to pay to Fab India website also. So the inward transaction could happen through the payment aggregator cross-border. I hope this is clear. Now a non-bank entity that is already authorized as authorized dealer category 2, they will not fall under the purview of these directions basically because they are already allowed to undertake the foreign exchange transaction. So they do not have to follow the payment aggregator cross-border directions because they are already following the directions for the authorized dealer category 2. Okay, a card transaction where the foreign exchange settlement is facilitated by a card network and aggregator receives the payment in local currency is not part. So a card transaction where basically foreign exchange settlement is facilitated by the card network like Visa, MasterCard, American Express and such, and the payment aggregator receives the payment in local currency. So this is also not a part of payment aggregator cross-border. So remember this, that these are important. You have to remember that a non-bank entity authorized as authorized dealer category 2 will not fall under the purview of the payment aggregator cross-border business, as well as a card transaction that is happening for the foreign exchange settlement facilitated by a card network like Visa, American Express and such, and the aggregator receives the payment in local currency. This is also not a part of payment aggregator cross-border activity. Okay, so this is the idea. The rest of the payment aggregator inward transaction like payment aggregation, the inward and outward transaction can be done by payment aggregator cross-border for the e-commerce transactions. Okay, for the electronic transactions. So e-commerce transactions, basically the buying and selling of the goods and services is happening through the digital platform, through the electronic platform, electronic network, through the website and such. Now payment aggregator online. So payment aggregator online, basically payment aggregator that facilitates transactions where the acceptance device and payment instrument are not present in close proximity. You are buying something from Amazon, Flipkart, Meesho, or you are buying something from a website in India as an Indian citizen. You are buying something from the internal websites, from the websites present in India and e-commerce platforms present in India. So basically that is payment aggregator online. Okay, so here you can see this is like if you have bought something from Amazon India, if you have bought something from Flipkart India, if you have bought something from Meesho, so you can pay through your UPI, you can pay through your credit card. Here you are just buying through the e-commerce website. So this is payment aggregator online, that where the acceptance device, that is the POS machines and such, are not available nearby, okay, and they are not present in the close proximity while making the transaction. So the online transaction that happen, you are paying Zomato, you are paying Flipkart, or you are paying through the Amazon and such, so that is done through the payment aggregator online. If you are paying through the Amazon website, okay, so the payment aggregator provides you the facility of UPI card, wallet and such, and you can pay through any of the means. And the payment aggregator facilitates the aggregation of payment from the customers, and then later on transfer the payment or the money to the merchant. So this is the idea. So payment aggregator, we have understood that payment aggregator, they facilitate the aggregation of payment from the customers to the merchants. That's it. Now payment gateway, basically they are the entity that provides the technology infrastructure to route and facilitate processing of payment transaction without any involvement in handling the funds. So payment gateway, they are just providing the technology infrastructure so that the information can be processed, that okay, the customer wants to send the money, the merchant needs to get this much money. So only the routing of information is happening through the technology infrastructure that is provided by payment gateway. They do not handle any kind of funds. So basic difference between payment aggregator and payment gateway is, payment aggregator, they work as a bridge between the merchant and customers. They work as an intermediary between the merchant and the customers, and they take the funds from the customers and they settle the funds to the merchants, okay. So act as a bridge between merchants and provide the merchants with multiple payment channels so that can be used for the customer payments, okay. Provides a single point of integration for merchants so that merchants do not have to connect with UPI system of the different banks, or they do not have to connect with the card networks of the different like Visa, MasterCard and such, and they do not have to connect with the wallets of the different wallet providers. So basically the merchants and the customers, the facilitation of payment can happen through the payment aggregator. And payment aggregator, they act as a bridge between merchant and multiple payment channels. They handle the funds also, they collect the payments from the customer and settle the payments to the merchant. They route the data, they transfer the data from the merchant to customer and customer to merchant, that okay, the payment has been done and so and so. And they also collect, hold and transfer the money to the merchant from the customer. Now payment gateway, they only provide the technology infrastructure, that is software, APIs, encryption, routing to securely transfer the payment data between the buyer, merchant and bank and payment network. They do not handle or settle the funds. They cannot handle or settle the funds. They can only transfer the information from bank to customer, from customer to merchant and such. They just route the payment data securely. Now, do you have any confusion between the difference between the payment aggregator and payment gateway? Payment aggregator, they are the bridge between merchants and multiple payment channels. So the merchant do not have to log in to multiple payment channels, UPI cards, wallets, net banking and such. Just as soon as the merchant connects with the payment aggregator provides for the transactions. That's it. So merchant just connect with the payment aggregator will provide for the transaction. That's it. So payment aggregator provides for different UPI applications, okay, third-party applications like Google Pay, Phone Pay, Paytm and such. And the payment aggregator also provides for different card networks, also provides for internet banking or the card wallets and such, okay. So the payment aggregator provides a single point of integration for merchants. Now payment aggregator also handle the funds and route the data and collect the funds, which is not done by the gateway. Payment gateway only provides a technological infrastructure to securely transfer the payment data. That's it. Now Central KYC Records Registry. Officially valid document, equivalent e-document, digital KYC, video-based customer identification procedure shall have the same meaning as defined in the master direction of the KYC. That's it. Now, coming to the authorization for the payment aggregator business. So a bank does not require authorization to carry out payment aggregator business. So bank do not need any additional authorization to carry out payment aggregator business. A non-bank entity, that is not a bank, like your the Razor Pay, PayU, Cash Free, they are not the bank, they are non-bank entity. So they shall seek authorization for operating as a payment aggregator by submitting an application through RBI's Prava portal. So basically, non-bank entity, that is not a bank, non-bank entity like Razorpay, Cash Free, PayU, they need to take the authorization for operating as a payment aggregator by submitting the application in the platform for regulatory application validation and authorization. So we know that there is a Prava portal of RBI through which the application can be sent. So non-bank entities seek authorization for operating as a payment aggregator by submitting the application, by sending the application to the Prava portal. If the entity is regulated by a financial sector regulator, let's say the entity is regulated by IRDI, insurance regulator, PFRDA, pension sector regulator, SEBI, financial market regulator, so IFSCA, regulator of the International Financial Service Center. So basically, if a non-bank entity is regulated by any of the other regulator, it must, so non-bank entity wants to work as a payment aggregator also, it needs to get a no objection certificate from its own regulator and then apply within 45 days of receiving the NOC. So basically, non-bank entity that seek authorization for operating as a payment aggregator, it has to submit the application to the RBI through the Prava portal. If the entity that wants to get a authorization as the payment aggregator, so the entity is under the regulation of some other regulatory, so the entity first of all that wants to work as a payment aggregator, so the entity has to get the no objection certificate from its own regulator, and after getting the no objection certificate within 45 days of receiving the no objection certificate, it has to apply. Okay, so first of all, get the no objection certificate from your regulator, and after getting the no objection certificate within 45 days, you can apply for the payment aggregator license. Okay, a non-bank payment aggregator shall be a company incorporated in India. So a non-bank payment aggregator shall be a company incorporated in India under the Companies Act 2013, and in the charter document, of the company, or in the memorandum of association, that is the main document of the company of the applicant entity, should cover the proposed activity of operating as a payment aggregator. So basically, a non-bank payment aggregator shall be the company incorporated in India, that is under this Companies Act 2013, and in the charter of association, or in the memorandum of association, or in the main document of the company, there should be the operating framework, that how this company will operate as a payment aggregator, how it will be able to handle the payment aggregation functionality. So that should be written in the memorandum of association to the company, so that it is seen by the RBI that the company is serious in working as a payment aggregator and can handle the payment aggregation functionality. So non-bank payment aggregator shall be a company incorporated in India under the Companies Act 2013, the memorandum of association, the charter of, or the main document of the company of the applicant entity should cover the proposed activity of operating as a PA, as a payment aggregator. That is the idea. So these are the requirements for authorization for a payment aggregator business. Continuing with the next point, following is applicable from the date of these direction. See, as soon as these new directions, as soon as these master direction are released, so it has been said that the payment aggregators that had taken the certificate of authorization previously, they will have to take the new certificate of authorization under this new master direction. Okay, so a payment aggregator having a certificate of authorization issued by RBI, and they are already carrying on business as a payment aggregator in the physical manner, they shall inform the RBI that okay, we had got the certificate of authorization under the previous master direction or under the previous direction, and we are working as a payment aggregator in the physical manner, and a revised certificate of authorization shall be issued to the payment aggregator. Okay, so a revised certificate of authorization will be given under the new master direction to the payment aggregators that already had the certificate of authorization under the previous guidelines. A payment aggregator that wants to have the certificate of authorization, desirous of starting business in another PA category, in another payment aggregator category. So let's say the payment aggregator, you were working as a payment aggregator physical. You were providing to the stores, you were providing the QR codes, and you were providing your own POS machines and such. So you were working in the physical manner, but now you want to work in the online manner for the e-commerce websites or for the websites also. You want to work as a payment aggregator cross-border. So if you want to start the business in another PA category, so you should inform RBI at least 30 days prior to commencing the new business. So you just have to inform the RBI. Okay. Now, an entity whose application for grant of certificate of authorization for the payment aggregator online or payment aggregator cross-border is under consideration by RBI, they shall intimate the Reserve Bank about its existing payment aggregator physical business if they have any. So if they are already working in the payment aggregator physical, and they want to get the registration as a payment aggregator online or payment aggregator cross-border, so they have to inform the RBI. If they do not have this kind of payment aggregator physical license or certificate of authorization, that is also fine. Okay. So basically, an entity whose application for grant of certificate of authorization for payment aggregator online or payment aggregator cross-border is under consideration by RBI, they shall inform the RBI about its existing payment aggregator physical business, if any, through the online portal, through the Prava portal by December 31st, 2025. So basically, a payment aggregator having a certificate of authorization, already they have the certificate of authorization, they need to have the revised certificate of authorization, for which they just have to inform the RBI that they are working as a payment aggregator physical. Or a payment aggregator having a certificate of authorization issued by RBI and they want to further expand their business to the new categories, they have to inform the RBI at least 30 days prior to commencing the new business. Okay. An entity who has sent the application for payment aggregator online or payment aggregator cross-border, they need to inform the RBI if they have payment aggregator physical business, they have or they do not have, through the online portal by December 31st, 2025. An entity carrying on only payment aggregator physical business shall apply for authorization as prescribed. So non-bank entity, so this point, remember this point. Okay. So basically, it is written that an entity, the non-bank entity, we can say non-bank entity carrying on only payment aggregator physical business, they need to have the NOC from their own regulator. Okay, from their own regulator. And after getting the NOC, they have to fulfill the criteria that after getting the NOC within 45 days, they need to have the certificate of authorization. So an entity carrying on payment aggregator physical business shall apply for authorization as prescribed in the 5B above by December 31st, 2025. So as per the previous guidelines, you had got the payment aggregator physical business license, but now under the new directions, you have to follow this direction, you have to follow this new direction, and you have to take the new license or the new certificate of registration, certificate of authorization. So an entity that is already carrying out the payment aggregator physical business, they shall apply for authorization under the new master direction as prescribed in the 5B above. You have to take the NOC. After that, within 45 days, intimate the RBI. Okay, by December 31st, 2025, you have to do so. If you fail to apply again by the due date, and you shall intimate the banker, you shall intimate the bank and wind up your business by February 28, 2026. Any confusion here? Last point from the authorization of payment aggregator business is that application of an entity not meeting the minimum capital requirement. Okay, so basically there is a minimum capital requirement. If you are not meeting the minimum capital requirement, or if your application is incomplete or your form is incomplete, then your application will be returned. Okay, it will not be taken care of. Which both are working independently or what? Now capital requirement. So the previous point was that there is the minimum capital requirement. If you are not meeting the minimum capital requirement, or if your form is not complete, then your application will be returned. So now what is the minimum capital requirement? So an entity that is seeking authorization to start or carry on payment aggregator business. So if you want to start the business, or if you want to carry on, if you want to continue, as it has been said now that the previous organizations that already had the authorization, they need to have the revised authorization now. So basically, if you if you want to commence the operation or if you want to carry on the payment aggregator business, you shall have the minimum net worth of 15 crore at the time of sending the application for authorization, and you shall have a minimum net worth of 25 crore by the end of third financial year of grant of authorization. So when you are starting the operations, at least you should have 15 crore of the net worth, and by the third financial year of grant of authorization, so you had got the authorization in 2024, so by 2025, 2026, 2027, so by the end of the financial year you have to get the 25 crore of minimum net worth. This is the idea. So an entity seeking authorization to start the payment aggregator business or carry on the payment aggregator business, they shall have the minimum net worth of 15 crore at the time of sending the application for authorization, and by the end of third financial year of grant of authorization, they shall have the minimum net worth of 25 crore that they have to maintain on the continuous ongoing basis. Now when we talk about net worth, it has a set definition, but this definition has been amended a little for the payment aggregator particularly. So such a question can come that which of the following does not come under net worth, or which of the following come under net worth. So net worth has the general definition that net worth consists of paid up equity capital plus free reserves plus the balance that the entity has. So an entity that wants to have the payment aggregator authorization should have the net worth. Now the net worth consists of paid up equity capital. That is, the company has got the capital from the shares. Okay, the company has got the money by selling the shares, so that is paid up equity capital. Okay, so number of shares multiplied by face value of the shares. So paid up equity capital, so paid up equity capital basically means number of shares multiplied by face value of the shares. So shares that have been sold multiplied by their face value. So this is paid up equity capital. So let's say the company has got 10,000 rupees, okay, through the paid up equity share, through the by selling the shares basically at the face value. Face value is decided when the IPO is released and such. So face value is the value decided by the company, and that is noted in the books of the company. Free reserves, the reserves that the company has, the reserves that the company is keeping with itself. From the profit, some reserves have been kept with the company. So these are the free reserves. Plus balance and share premium account. Now the share value in the market is increasing. The value of the share is increasing in the market because the company is doing well, and the share value, the investors have trust in the company, so the share value of the company is increasing. So there is balance in share premium account because share value is increasing. So the additional value that the shares have, so that amount goes to the balance in share premium account. So this is balance in share premium account. So the premium value of the share, the higher value of the share, so that is balance in share premium account. Capital reserves, let's say the company has sold some assets, property or equipment, so through that the capital reserves, the reserves that the company is getting, so that is all added in net worth. So capital reserves, that is surplus arising out of sale of assets but not from revaluation. So we are not adding revaluation. Let's say I have done the revaluation of this bottle. So this bottle value has increased from 100 to 200, but I'm not selling this bottle. So right now the revaluation should not be added in my net worth, because the bottle value has increased, but I have not sold this bottle, so I have not actually received the money. Okay, so the capital reserves only include the surplus that has come from actual sale of assets but not from revaluation. Adjusted. Now all of this we are adding the paid up equity capital, free reserves, balance and share premium, capital reserves. So all of the addition that you have got, that the company has got, the money that the company is getting has been added. Now deduct the losses that has happened. So accumulated loss balance, deduct the book value of intangible assets. Deduct the book value of intangible asset. Intangible asset means copyright, that the company has, patent value that the company has, the goodwill or the brand value that the company has. So this is the book value of the intangible assets that are not the actual tangible assets. Okay, so deduct the book value of the intangible assets, that is the value of the copyright, patent, goodwill or the brand value of the company. Deduct the deferred revenue expenditure. Deduct the deferred revenue expenditure, that is the past spending disguised as an asset. So deduct that. Now this was the general definition of the net worth. This is the general definition of the net worth. Now in the net worth there is additional, like for the payment aggregator, in the net worth there is the additional thing that has been said. So in the net worth now means paid up equity capital plus the free reserves plus the balance in the share premium account plus the capital reserves from the actual sale of the asset. Now here it has been said that also add the compulsorily convertible preference shares. So they are preference shares where the preference is given to these shares, and if any profit happens, first the profit are shared with these preference shareholders, and if the losses happens, they handle the losses at last. So they are the preference shares. They do not usually get the voting rights, but they get preference in getting the profit and such, okay, in getting the dividend and such. So compulsorily convertible preference shares means these preference shares that have to be converted to equity shares to the regular shares. So preference shares that have to be compulsorily converted into the regular shares, into the equity shares. So they will also be included in the net worth, it has been said, for the payment aggregator. So include the compulsorily convertible preference shares. The shareholder agreement should specifically prohibit any withdrawal of this preference share capital at any time. That means shareholders will not be able to sell the compulsory convertible preference shares until they are converted into the equity or the regular shares. So in the net worth definition, this compulsory convertible preference shares has been added for the payment aggregator. Now in the normal definition, we are deducting the loss balance, we are deducting the book value of the intangible assets, we are deducting the deferred revenue expenditure. Now it has been said for the payment aggregator specifically deduct the deferred tax asset. Deduct the deferred tax asset. Deferred tax asset, an item on a company's balance sheet that reduces its taxable income in the future. So taxable income will be reduced in the future. So basically the net worth calculation for current year should not include this deferred tax asset. That's why deduct the deferred tax asset. So is this clear? Is this clear that in the net worth, this is the general definition of net worth, all the assets or all the money that the company is getting minus all the payments or all the losses of the company, deduct that. So all the assets minus all the liabilities, all the assets minus all the liabilities is the net worth. Now this is the general definition of net worth. In this there is a particular addition that has been done. Compulsory convertible preference shares are added in the net worth for the payment aggregators, and the deferred tax asset are deducted from the net worth calculation for the payment aggregator. This is the idea. Moving forward, entities applying for payment aggregator authorization must submit a statutory auditor's certificate confirming the compliance with the net worth requirement. So basically, payment aggregators, they have to comply with the net worth requirement, as well as they have to provide a auditor's certificate that they are following the net worth requirement. Now a newly incorporated non-bank entity that is getting the payment aggregator license, or they want to get the payment aggregator authorization, so they also need to submit the statutory auditor certificate for current net worth that they have, as well as the provisional balance sheet they have to give. Next is governance norms. So conduct of payment aggregator business. So payment aggregator business, basically they should be professionally managed. The person that is the payment aggregator should have the financial integrity, good reputation, character, honesty. Okay, so payment aggregator shall be professionally managed. The promoters and directors of the entity, the promoters and directors of the payment aggregator shall satisfy the fit and proper criteria. That means they should have the financial integrity, good reputation and character and honesty. They should not be convicted. They should not be convicted by a court. They should not be under the insolvency process and such. They should not have any order restraining, prohibiting or debarring the person from assessing or dealing in any financial system. They should not be unsound of mind. They should be financially sound. So these are the criteria basically. The payment aggregator business should have a good governance norm. The promoters and directors should follow the fit and proper criteria. Any takeover or acquisition of control or change in management of a non-bank payment aggregator shall adhere to the RBI regulations. Okay, so if any takeover is happening, if any acquisition of control or change in management that is happening of the non-bank payment aggregator, so that should follow the guidelines. Now coming to the next part, that is dispute management framework. So the payment aggregator should have the dispute management framework so that the refunds can happen on the timely basis, because the customer refunds has to be done, right? Customer want refund, so the refund should be within the proper timeline in line with RBI's turnaround time instructions. Okay, so basically dispute resolution, dispute management framework. Dispute resolution, payment aggregator must have the mechanism to handle the payment related disputes. Okay, payment aggregators, because they are handling the payments from customer to merchant and such, so they should have the mechanism to handle the payment related dispute, and the refund should have a clear timeline that within how many days, within how many hours the refund will be given to the customer. Agreements, so the merchant as well as the payment aggregator, the acquiring bank that send the money to the merchant, so they should have the clear agreements. Roles and responsibilities should be laid out, that who will handle the refunds, who will handle the failed transaction, the reconciliation of data should be proper, that the bank and the payment aggregator and the merchant should have the data, same data. Okay, grievance redressal norms should be followed for the customer. So basically the payment aggregator, merchant and bank should have the agreements, should have the formal agreements, so that the roles and responsibilities are clearly laid down, that what role and responsibility the payment aggregator will have, what role and responsibility the merchant will have. Okay, acquiring bank is the bank that helps in the transfer of funds to merchant. Okay, so this is the idea. Disclosure, payment aggregator should disclose its merchant policies, privacy policy, terms and condition on its website and mobile application. Grievance redressal, payment aggregator shall appoint an officer responsible for responding to issues raised by its merchants that have been onboarded on the payment aggregator. So payment aggregator, that is Razorpay, is working for various merchants, let's say Amazon, Flipkart, Meesho, as well as it is working for Kalsang and the stores like DMart and such. So the Razorpay should have an officer responsible for responding to the issues raised by the multiple merchants that are onboarded by this payment aggregator. Okay, now the grievance redressal of the customer will be handled by as per the roles and responsibilities that have been laid down in the agreements. Next is security, fraud prevention and risk management. So basically you can read this. Basic idea is that the fraud prevention should happen, the digital platform should be very secure and such. So payment aggregators shall put in place adequate information and data security infrastructure and systems for detection and prevention of fraud. Information security policy, so board approved information security policy should be there. So board approved information security policy should be there for security of the payment system, and implement these security measures and ensure adherence to the RBI's baseline technology related recommendation. That okay, this is the baseline requirement for the technology, this is the basic requirement for the technology and for the information security. Data storage, so payment aggregator shall comply with data storage requirements as applicable to payment system operators. System audits, so system audits have to be done. So Indian Computer Emergency Response Team, so Indian Computer Emergency Response Team should conduct or an annual system audit including cyber security audit should be conducted by the Indian Computer Emergency Response Team, empaneled auditors. This is the idea. So this is the basic idea. Now conduct of payment aggregator business general directions. So payment aggregator shall aggregate funds only for the merchant with whom it has a contractual relationship. Okay, payment aggregator business shall not carry out marketplace business, that means it itself cannot have the e-commerce operations. Okay, this is the idea. Payment aggregator shall ensure that the existing instructions is being followed for the merchant discount rate. As you know that when you are doing the card transactions, there is a percentage that the merchants have to pay on the card transactions. Okay, so for the card transactions the merchants have to pay a percentage of the payment. So the existing instruction has to be followed for the merchant discount rate, that is for the card transactions a percentage has to be taken from the merchants of the amount. Okay, the payment aggregator shall also ensure that any charges other than the price of goods, let's say for the good is of 500 and the delivery charges are 40. So the additional charges have to be specifically mentioned and segregated. So the price of the good and the additional charges, they have to be shown additionally, like the platform charges are rupees 10, delivery charges are rupees 20. So this has to be shown separately. So basically the price of goods, service, investment amount charged by a merchant are distinctly displayed with the other charges. So this is the basic idea, that the price of the product and the other charges has to be distinctly shown. The payment aggregator shall not place limits on transaction amount of a particular payment mode. That means the UPI, for UPI, what will be the amount? For the other transactions, what will be the amount? Like for the UPI, what is the amount? For the card transactions, what is the limit? As well as for the different banks and different PPI wallets, what is the limit? So these limits are decided by the bank or by the card networks. Okay, so a payment aggregator shall not place, just a second. So a payment aggregator shall not place limits on transaction amount for a particular payment mode. Okay, the transaction limits are decided by the banks for the UPI, let's say, or for the card. The transaction limits are decided by the bank and the responsible authorities. The payment aggregator shall not give an option for ATM pin. Like usually when the card not present transactions are happening, this we have discussed in the last session. The card not present transaction basically means that you are putting in the card details in the digital manner. The card is not present at the merchant location. Okay, so you are putting in the details for the card in Amazon or Flipkart. You are putting in the card details. Okay, so when you are putting in the card details, usually after the transaction is initiated, the OTP is sent. So it is said that the ATM pin should not be used as the factor of authentication. Rather use the OTP, or you can use the other methods of authentication. You cannot use ATM pin for authentication for card not present transactions. Okay, all refunds shall be made to the original method unless instructed by the payer. If the customer wants, then only the refund can happen to the other methods. Okay, through the wallets and such. Otherwise the payment refund should also only happen in the original method. So refund shall be made to the original method unless instructed by the customer. Payment aggregator may avail services of a payment gateway also, because payment gateway provides the technological infrastructure. Okay, payment gateway that we have discussed, they shall not fall under the scope of this master action, because payment gateway, they are not handling the funds, they are not transferring the funds, they are not settling the funds and such. They are only providing the technological infrastructure. So payment gateway shall not fall under the scope of this master action. However, a payment gateway is encouraged to adopt the baseline technology recommendation, that is the basic technology recommendations. That's the idea. Now coming to the next point. So do you want me to break this session in two parts? Because this is a very long direction and we still have a lot of slides to go, nearly 10 slides. Now moving forward, specific directions applicable to payment aggregator cross-border. So if you want, I can break this session in two parts and we can discuss till this here, and the rest of the direction we can discuss in the next session. So do tell me in the comment section. So specific directions applicable to payment aggregator cross-border. So for the cross-border, there are specific directions, there are specific limits that has to be kept in mind. Okay, so funds related to inward and outward transactions as carried out by a payment aggregator cross-border shall be kept separate. So inward transactions and outward transaction should not be mingled up. They should not be mingled up. The amount of inward transaction and the amount of outward transaction shall be kept separately. Okay, so that is the basic idea. Outward transactions can be carried out using any payment instrument. So outward transaction can be carried out using any payment instrument provided by the authorized payment system in India, except small prepaid payment instrument that usually have the limit of 10,000 rupees. Okay, so outward transaction can be carried out using any payment instrument that is authorized in India for the payment, except the small PPIs. Small PPIs, they have the limit of around 10,000 rupees. Okay, payment aggregator cross-border shall not purchase foreign currency from or sell it to any entity other than an authorized dealer. So basically, payment aggregator cross-border, they shall not purchase foreign currency, or they cannot sell the foreign currency to any entity that is not authorized dealer. That means the purchase and selling of the foreign currency can only happen to the authorized dealer. That I have told you, that authorized dealer, they are authorized to handle the foreign currency. In respect of inward or outward transaction processed by a payment aggregator cross-border, the maximum value per transaction shall be 25 lakh. This is very, very important to remember from the examination point of view. The inward or the outward transaction, they have the maximum value per transaction of 25 lakh. Okay. Authorized dealer 1 banks maintaining inward collection accounts for the inward transaction or outward collection amounts for the outward transactions, they have to follow the FEMA regulation, Foreign Exchange Management Act regulations. Okay. To establish the norm for the transaction, basically payment transaction, inward or outward, they are identified as a cross-border transaction. So inward transaction or outward transaction, they are called cross-border transactions. Okay. Settlement in non-INR currencies, that is German's region is sending money for the Fab India website. So that is in euro and such. So settlement in non-INR currencies, that is settlement is happening in euro or dollar, they shall be permitted only to those merchants, for those Indian exporters which have been directly onboarded by a payment aggregator cross-border facilitating inward transactions. So Fab India website can only get the settlement in the non-INR currencies if the Fab India website has connected with the payment aggregator cross-border, okay, entity. That is the idea. So basically, the settlement in non-INR currency shall be permitted only for those merchants or for those Indian exporters websites which have been directly onboarded by the payment aggregator cross-border. That is the merchants, the Indian entity, Indian exporter, it is connected with the payment aggregator cross-border. Then only they can get the settlement in non-INR currencies, or the settlement in non-INR currencies can be allowed in this case. This is the idea. Now the rest of the part we will do in the next session. Let's revise that what you have to keep in mind from the directions. Okay, let's just revise the first part, that what we have discussed. We have discussed about the RBI's payment aggregator master direction. We have started with it. We have discussed that previously the directions were released in 2020, 2021, 2023, but now the new directions have been released. Okay, so these directions are called RBI Regulation of Payment Aggregator Direction 2025, and these directions are coming in effect immediately. These directions have to be followed by all bank and non-bank entities. These directions shall also apply to all the authorized dealer banks as well as scheduled commercial bank that are connected with entities undertaking the payment aggregator business. Okay, we have discussed the different definitions for your clarity, that what is outward transaction, what is inward transaction, what is a merchant and such. We have discussed about payment channels. There are different payment channels that is there. Payment aggregator can be in physical, cross-border or online manner. As well as we have discussed about these also. Payment aggregator and payment gateway difference we have discussed. Authorization norms we have discussed, that for authorization these guidelines have to be followed. A bank does not require authorization to carry out payment aggregator business. The non-bank entity has to get the authorization under the new master direction, for which they can send the application through the Prava portal. A no objection certificate has to be taken from the regulators and then apply within 45 days of getting the no objection certificate. Non-bank PA shall be a company incorporated in India under the Companies Act 2013, and in the memorandum of association of the company they should have the norms for operating as a PA. Payment aggregator. Then a payment aggregator having the certificate of authorization has to take a revised certificate of authorization, or if they want to extend their business activities to another categories also, payment aggregate categories also, they need to inform the RBI at least 30 days before starting with the new business. Okay, if the registration, if the application is being sent for certificate of authorization for payment aggregator online or cross border, it has to be informed that do you have the previous business of payment aggregator physical or not, were you working as payment aggregator physical or not. This has to be informed by December 31st 2025. An entity carrying on only the payment aggregator physical business, they shall apply for authorization under the new master direction, okay, as prescribed, and they have to take the no objection certificate and such, and they have to apply within 45 days. So basically, if the entity carrying on only the payment aggregator physical business that do not have the authorization till now, they shall apply for authorization by December 31st 2025. An entity which fails which fails to apply by December 31st, 2025, they need to wind up their business by February 28, 2026. So basically, if you have not taken the certificate of authorization previously, if you have the certificate of authorization previously, already carrying on business as a payment aggregator physical, then you only need to inform the RBI and take the revised certificate of authorization. An entity that is carrying on only the payment aggregator physical business but do not have the certificate of authorization shall apply for authorization, basically shall apply for the new authorization. Okay, application of an entity shall be rejected if they are not meeting the capital requirement. Capital requirement is 15 crore net worth in the initial phase and 25 crore by the end of third financial year of grant of authorization. Net worth definition has been amended a little to include compulsorily convertible preference shares and to exclude the deferred tax asset. Then entities that apply for payment aggregator authorization, they need to have the certificate from the statutory auditor. Next is conduct of PA business. Governance norms should be followed. Dispute management framework should be there. Security, fraud prevention, risk management should be there. Annual system audit should happen, conducted by the CERT in India. Okay, general directions, these you have to cover so that you have the idea that card not present transactions, for that ATM pin cannot be used as a factor of authentication. Okay, the payment gateway, they will not have to follow the master direction, that is this, but they are encouraged to adopt the baseline technology. Okay, transaction limits cannot be imposed by the payment aggregator. Transaction limits are decided by the entities. Okay, so card issuing bank, they will be responsible for placing transaction limit on the cards and the other things. This is the idea. Next is that specific directions we have discussed for the payment aggregator cross border. So funds related to inward outward transaction, they shall not be merged, they shall be kept separately, and the maximum value per transaction for the inward or outward transaction shall be 25 lakhs. Settlement in non-INR currencies will only be permitted for those merchants or Indian exporters which have been onboarded on the payment aggregator cross border, and these are handling the payments. Okay, so this is the basic idea. Now the next due diligence by payment aggregator as well as the next part of the master action we will discuss in the next session. Okay, let me give you certain questions. So a non-bank entity shall seek authorization for operating as a payment aggregator by submitting an application. Now the no objection certificate has to be taken from the regulator, and from that regulator, and then apply within how many days of receiving the NOC. Now this question you will be able to answer when you have done the second part, but the first question, try to answer the first question. So non-bank entities shall seek the authorization for operating as a payment aggregator by submitting an application through the RBI Pravah portal. If an entity is regulated by the other regulator, it must get a no objection certificate from the regulator and then apply within how many days of receiving the NOC. So try to answer this question. Is it 30 days? Is it 25 days? Is it 45 days? Is it 60 days or 75 days? Okay, so that is the idea. Now thank you very much for joining the session. As you know that there is the offer that is going on, that is for limited time only, that is till 30th September 2025, where you are getting flat 75% off on the regulatory body courses, and you can use the code festival75. You will get the PDF of the session in the Telegram channel. The second part of the master action will be done in the next session. Okay, so this is the idea. So this is it. The session, the master action is very long. That's why I'm dividing it. Though I had brought the full PPT, but I don't think that you will be able to understand in one go. So I have divided this session into two parts. First part we have done today. The second part we will do in the next session. Okay, either on Thursday or maybe on Thursday we will have a off because of the Dussehra. So maybe on Saturday the second part will be done. Till the second part, do revise everything. Do revise the PPT that will be provided in the Telegram channel so that you are able to understand the second part. Okay, thank you everyone. Thank you for joining. So thank you everyone. The second part will be done in the next session. Okay, so do not worry about it. I have prepared the PPT already, but I do not want to make you suffer with all the information in one go. So we will discuss the second part in the